Alrighty, welcome back to day two of the Financial Speculator series. We're going to be finishing up the psychology segment, and I'm just going to pick up where we left off. And just to review everything we covered from the past, we looked at Abraham Maslow's hierarchy of needs, where you'd like to be in regards to what needs you're paying attention to prior to stepping into an environment that is inherently risky, just for performance reasons, and making sure that you're in the right mental state and you're in the right area where your brain can prioritize rational analysis versus greed or fear. Specifically, when you're in a fear state and your amygdala is firing, you're not really in a state where your prefrontal cortex can take over, be rational, make logical decisions, be precise, and execute consistently. There are certain things that you just can't fight. That's Mother Nature. And you just have to face the fact that you are human. And then you also have to face the fact that it's better just to be patient, give yourself some grace in that period, to then take the next step, have all your P's and Q's outside of trading secured, and then stepping into the market. And that's the best way to set yourself up for success. And then we went over where you should start. So, pretty much when your identity is sound, when you don't adhere to things you see online, when you don't have, I want to make it really quick idea, you're not in that mental model. When you're able and you allow yourself of grounding yourself into a process. See, if you don't have certain things in your life, it's going to be hard to slipstream into I'm going to do this, this, and that, and I'm going to do that every day. When you're all over the place and you're panicking, and it's because you don't have your rent money, you don't have groceries, you don't have emergency funds, it's going to be hard to build off that, and you're just going to be starting on a shaky foundation. And you just need to get to a point where you're unfazed by things. Things stay in the background of your mind when you are grounded in a process. And then just to review, discipline over time gives the curve of consistency where eventually you will land at the X coordinate of mastery. So, inevitably, if you are consistent in your discipline and you do the things you say you're going to do over time, you're eventually going to master the skill set of trading. And this curve goes for anything that's hard, anything that you're pursuing, even outside of trading. It's just a framework where you can go back to in moments of doubt and moments of fear where it's like, hey, all I have to do is show up. I do what's right. I do what I told myself I'm going to do, and things are just going to work to my favor. And the next part would be grounding, right? Grounding and just the model of what the process looks like for trading specifically. You just take a win or a loss when you place your trade, regardless of the outcome that happens. You're going to learn and you're going to journal, you're going to back test, you're going to go to the gym, you're going to do whatever it takes to learn and grow from it and feel the things you need to feel, understand who you are in the moment, who you are before the trade. What were you thinking before the trade? Journaling that really helps. What were you thinking after the trade? Journaling that really helps. What were you doing during the trade? Journaling that really helps. So you can just go back in the future and see, like why didn't I even place a trade when I knew prior I was in this headspace? I came on really calm, and that calmness slipped into a bad performance because I was very lenient with my entry and my execution. I didn't wait for X, Y, and Z to play out, and this calm attitude just allowed me to think that like it's just gonna do what I want it to do, right? And then you can look at the data and see which like headspaces are best for you when you step on the charts and you're grounded in that trading environment. Like which headspace can you notice from your journaling where you're consistently hitting your setup, you're consistently patient, and then you just iterate the process from whatever outcome you got that day. So it's like you took a loss, then you just know not to do what you did again. If you take a win, you know what works, you know what you can replicate. And then if it loses, right, if it's a strategy technical issue, if you took a win and then you take the same setup, um, the next day, right? And it loses, well, there's really nothing you can do about that. And that's what's unique about trading because someone can do everything right. They could have their fundamentals on par with everything. They could be so aware of key economic indicators. They can know all the new data coming out, right? They can know very, like, the technicals and the fundamentals can align up perfectly and they could still lose a trade. And that's one of the things about trading that you just have to understand. It's all probability. So, in the first video, I talked about how we will eventually go over probabilistic thinking, and you're just gonna have to accept the fact, like, the stars are gonna align, but that doesn't necessarily mean that it's gonna go the way you want it. And being able to detach from that, and it's gonna be easier um, understanding it. It's gonna make it easier to detach from that. And then just making sure it doesn't become your life. That's another big thing for that scenario, and then you just iterate, and then you go on the next day, and it's just this repeated process. Like, in a nutshell, all trading really is showing up every day, having discipline, being patient, patient for your edge. And I know everyone's heard that term if they've been in the trading space. Your edge will appear through this process. Your identity and who you are will appear through this process. Say you take the process and with everything you currently know, right? If you missed the first video, then you're gonna miss what I said in regards to scratching that, because I'm gonna be doing a full course to give you the mental model, how to think, how to manage downside risk, how to execute and implement a system and a plan and stick to it. Um, but realize, if you already have a system, you already have a strategy, and it's not working, and you've been doing your version of this process, sometimes you're just gonna have to face the noise and really, like, understand it's like that isn't working. Because if it's not working, then it just lets you know that you just have to fine tune the process. You have to switch things around. You have to iterate. What if your iteration is just backed by wrong information, right? Like, you're listening to people online who are pretty much saying that they can give you a strategy and it's gonna work 90% of the time. They can give you a strategy that's gonna do this and that for you 100% of the time. Like, sit back and think for a second. Those people are selling you on hardship, really. Like, they're your brain instantly opts for short-term gratification. Like, that's naturally how you're wired. That's like your lizard brain. And sales and sales psychology goes off of that. Understanding that, wow, like, people naturally and subconsciously opt for short-term gratification, but in reality, what's really going to change their view on things and their performance is not, oh, I'm going to follow this guy's model and I'm just going to, like, become a millionaire. Delayed gratification is what you learn, and you can't just buy that off someone. You learn that, and that's just the solid truth. I'm going to keep it a buck with you. But that's inevitably what's going to lead you to finding mastery in trading. And, like, your edge will appear over time. So that process you have, if it's failing, then there's no edge in it. But if it's successful over time, where you're seeing your equity curve, like, move slowly, incrementally higher, sure, it has little dips, but overall, it's profitable, even with a 30% win rate, even with like a 3 profit factor, a 1 profit factor, or, like, it doesn't really matter those metrics depending on your system. But if you're making money, you're obviously doing something right. And over the span of those trades, and not one individual trade, your edge appears. So staying in the process is very important. And the longer you're in it, and this is, like, the easiest part. Well, I'd say so, because it's like, just understand, every day, every day you're in it is another day where you're getting closer to mastery. So as long as you stay in the process and keep your mind focused on that, not wins or losses, because these wins or losses will take you out. And that's, like, if you mentally attach to that, mentally attach to the whole process itself, not just components within it, you know? So, and then we went over awareness of yourself. We went over the mirror dichotomy, 2 segments that are important on trading psychology. And I'm just going to pick up where we left off, and we're going to go over negative scenarios and behavior patterns. We're going to go over gambling, and what gambling produces in the stock market. And then we're also going, not even just the stock market, like equities, futures, forex, pretty much anything that any security that's tradable. It is not wise, especially if you're going to be a professional and your goal is to be a professional. Like I said already in the first video, if you're looking to get rich quick, if you're looking to rush like mastery, this is not going to be a series for you. And just go watch some 7-minute video, bro, of some dude basically just giving you bits and pieces of whatever his experience was, dude. Because I shit you not, like you're not gonna become a G from visually like watching something and getting that like that dopamine spike and thinking, oh, like he just gave me everything I need. I just got the 7 years of experience or X amount of experience within this like 5-minute video, right? Like you're just playing with yourself at that time, right? All right, so let's just get right into it before I digress further into that. But to start, the main thing we're going to go over this video is just the mental cycle that many traders go to. And this is why more than 90% of people experience boom and bust cycles majority of their career, if not all of their career. Um, and you can kind of see why it's hard to control. Um, and you'll definitely be able to know and learn after this how to control it. And it definitely requires a lot of awareness. So if you go over the last video, you'll for sure be caught up completely to take all of this in. But first, I'd like to cover this term allostatic load. So I watched a live stream of a trader and a trading psychologist, and she was basically explaining like what she's learned through trading, and she made these terms um, um, from like her understanding in psychology. Like she has the credentials, she has a degree, and she goes over what traders experience, and she's a trader herself, right? So allostatic load is something all traders experience. It's stress on your central nervous system from regulating emotions, right? So what happens when you're regulating your emotions like crazy? I just want to paint a picture real quick. Have you ever felt like hitting someone, but you didn't, but you feel that energy in you? That is a moment you can look at. That's a good example of where you're regulating your emotions. And then say after that situation, someone cuts you off on the road. So overall, you're just having a bad day through circumstances that you can't control, and you're regulating yourself, right? And you're feeling that eeriness. You're feeling the compulsive energy of wanting to like displace your energy on something else or do something, right? And over time, what happens when you're building up all this stress because your nervous system is regulating these emotions, your frontal lobe shuts down. So your prefrontal cortex is the part of your brain where you're able to think critically, you're able to think logically, rationally. All of the critical thinking aspects and the abilities of a human being is tied to the prefrontal cortex, according to just modern medicine, right? The logic, decision making, and critical thinking region of your brain shuts down due to allostatic load. So over time, eventually, if you're just in this stress state, the stress period, you won't be able to think logically. You won't be able to execute logically. You won't be able to execute rationally. And like before I continue, like that sounds a lot. That sounds a lot like being in the lowest tier on Abraham Maslow's hierarchy of needs, where you're in the survival mode. You need certain things to be met. You're not going to be able to be a professional on the charts physiologically because your brain is already regulating the stress of rent, the stress of groceries, the stress of survival, and you won't be able to think rationally. It's inherent. There's nothing you can do about it. Trying to beat your subconscious is trying to beat up a ghost. It would be a waste of time and a waste of energy. And all you can do is pull awareness and your conscious mind to be aware of that. That's all you can do. Just be aware of it. Most people beat themselves up when they do something that they don't realize, like in the moment, oh, that was a horrible idea. But beating yourself up is not going to help you in that. Being aware of it after, journaling it, reflecting it. Journaling is a byproduct, an action of reflection. And that's why it's good to practice that muscle of just awareness. So, the logical decision making and critical thinking of your brain shuts down due to all the stress your nervous system is regulating, right? So, your lymphatic system overrides. So, what happens when your frontal lobe, your prefrontal cortex shuts down, right? So the regions of the brain that begin to fire more and have more ground and control over your thinking tends to be the regions of the brain where your emotion comes from. So your lymphatic system. When your prefrontal, so your amygdala, when your prefrontal lobe shuts down from allostatic load, your fight or flight region of the brain overrides your thinking and takes control. You are now in a state of emotions and a state of impulsivity. So, really understand biologically, your brain is wired to screw you up when it's dealing with stress. And stress is something that we can't control in the market. You can't you could regulate it. You could park a mitigation block on it, but like you overall you're going to experience it. It's a part of the game. It's inevitable. Unless you're someone who just doesn't give like much of a crap about this, and I'm just gonna say this isn't for you if that's the mentality you're coming at this with. Um, you're not gonna feel it, but you'll see it on your performance, and maybe you'll feel it then. Not to be rude, right? But understand when your amygdala overrides your system, well, you just can't access your rules. Yeah, you won't be able to stick to the process. It's going to be hard to be grounded in the process, and all of that really comes to loss. Stress comes back to loss. Really, the main point in trading and what takes most traders out is loss. And you'll think one loss is bad, right? But it's one loss that leads to another loss. Not in the probability of the second trade, but just from the mindset, given that each trade is independent in regards to probability. Each roll of the dice is independent from the previous roll, right? So this only gets in your way when you're attached to loss and when you're not grounded in the process. Someone who's paying attention to the outcome is definitely not going to realize that they're slipping away from their process and their process is ultimately going to fail due to the fact that they left it, they abandoned it. They leave the process in the middle of the game. They There's this quote in reminisce reminiscence of a stock operator about Jesse Livermore, right? Where pretty much leaving your plan or leaving your campaign strategy in the middle of the war. It's like tearing up the playbook in the middle of the game. It just makes no sense. And you're going to fail if you do that. And I'm speaking from experience. It's hard to even be aware of it in the moment when you've gotten to a point in your trading where there's so much stress and you're just trying to regulate it, right? So the impulsive and emotional behaviors is the outcome. No longer rational decisions, not following rules, no logical transactions in the marketplace. So the trades you're placing, the transactions you're making, just building up commission fees, just spamming the button because you're trying to make back that tiny paper cut that's now a severed arm back, right? That ends up taking place. And guess what that creates? When you're now in this emotional state, you blew an account, you're near daily maximum drawdown, you lost 50% of your equity in a live account, whatever the scenario is for you, all that leads to is the beginning of the cycle of building more stress for your nervous system to regulate, which then cycles back to, oh, you can't think rationally, which cycles back to, now I'm in this fear state, fight or flight, which then cycles back to more poor decisions in the marketplace. So this is just a cycle of drawdown pretty much within your mind. And the best way to avoid that is to focus on following your rules, to focus on following your process. So, we're going to go into following rules, having a system, doing all the things that you need to do, like maybe set a schedule, a ritual post pre trade, whatever's best for you, and you'll figure that out over time. But if you can forget about the outcome, like you pretty much scratch it out of your mind, right? Let's go back to this mental process. If you can scratch out, let me see if I can move this over. If you can forget about that and you can forget about that, right? In regards to priority, and all you prioritize mentally is, oh, no matter what happens, I'm going to journal, I'm going to learn, I'm going to take something away from it. You're going to take more away from a losing day with data within yourself. You'll get data on your psychology, and that's valuable. You'll know more about who you are than you will on a win. So each trade really matters. If you're flinging random buy executions and sell executions in the market, if you're W keying the market, if you will, bro, you're going to get griefed. I'm going to be so straight up with you. But if you just focus on learning, journaling, iterating, and then moving on to the next day, wiping your mind's slate, I have another day to execute. This new day is independent from all the previous days of my life. That goes for everything, even outside of trading. Move on, move forward, move with strength, and remember you're strong. Those are the best ways to go about this whole process. So now this brings me to negative scenarios and behavior patterns. And these are my personal negative scenarios and behavior patterns. This is something I recognize I would do a lot. Um, so I missed a good trade setup that I was waiting for, but was hesitant in execution. So I see this thing dipping like 200 points, and I'm able to get in two separate occasions, and I don't because I'm so hesitant. I'm like, I don't want to get stomped out today. So I attach myself to the missed trade, and what does that lead to? A loss or a blown account. So sometimes for me, I've recognized that tends to me being like, oh, I missed what I wanted to happen. I'm now, since I'm late, going to reverse my analysis. How stupid is that? But in the moment, it seems so logical. You're getting the confirmation bias of, oh, the trade that I just missed is happening. Like I expected that to happen. So you're carrying this confirmation bias into the next trade of, oh, I'm just going to reverse it because I was right the first time. And then you take the loss because you're reversing the setup. The setup's still playing out, bro. So what can that lead to? Loss. And what does loss tend to lead to? If you can't chill with a paper cut, you're going to take off your leg. You're going to take off your arm. It's always a small loss that leads to a blown account. A blown account doesn't just, unless you're not using stops, a blown account isn't like one that poor risk management. You place a trade, no stop, it goes that direction, you blow the account. You have an issue, and that's a separate issue. Talk about that later. But if you have a stop within a system where you have risk to reward ratio on top of a like profit factor on top of something systematically plays out of like 10 trades you're going to hit 6, so 60% win rate. Let's go for example, right? Let's say a trader has a 50% win rate. So far on the account it's 2.0 profit factor, and then their average risk to reward is 3 to 1, right? Okay, So let's say that they lose one, right? And the account balance is blah blah blah. They're down 1R, right? So if they take another trade, they're down 2R. They take another trade, they miss, they're down 3R. It takes one trade to get back to break even because they're doing a 3R risk to reward, right? So they hit once on their system, they're break even after taking 3 losses in a row, right? Because they're in their system, each trade they're looking to make 3 for 1, right? So typically, if you're using some risk management strategy like that, bro's just clicking the button, losing 1R, losing 1R, stretching the stop loss. Now he lost 3R, losing another R. Next thing you know, for funded traders, daily maximum loss limit. For equity traders, they're looking at an equity curve that looks gross and they just wiped out weeks of hard work and discipline. And it sucks to suck, and it hurts, and something we're going to make sure you avoid experiencing. But it's a lesson that everyone learns over time. So another thing I experienced was overtrading, trading out of fear or greed, typically attached to the outcome. So attachment to an outcome, kind of iterating what I was saying earlier, being attached to the loss, being attached to the win, when we kind of know already that what you're going to be exposed to in the market environment is fear, greed, and disorder. So when you're winning, you're definitely going to be experiencing greed because you're going to be in a euphoric state, a stimulated state that causes delusion. When you're losing, you're going to be in a fear state, a state where you your natural response is like protection. You're going to be hesitant on trades like this first one, and then that could lead to a scenario where you're just losing mental capital, right? Taking that loss, blowing an account. So being detached from the outcome and just attached to the process strips away the stress, because now you can just think each day, and all you think about is not what the day's going to print, what the daily handle will look like. All you can think about is, I'm going to be a good trader today, right? So next one being tilt. So I've broken a laptop before, and that's probably TMI. Um, but the experience was definitely painful for me to do that. So attachment and emotional instability is definitely a cause um, that can cause you to take losses in blown accounts, and it's definitely hard to manage it, especially if you have like an anger issue problem. Like, I don't have an anger issue problem. But the market, when you make it your life, it can turn into something very depressing. Like, you're literally in the upside down, bro. It's definitely something you don't want to do if you're staring at charts 8 hours a day. And when I started, that was something I was doing, man. Like, my body was getting horribly out of shape. I couldn't go to the gym. Like, I didn't the I'm going to the gym now, right? But back then, when this was like everything, when I first started, I'm thinking, damn, like, wow, I just printed what I'm gonna make today at work. I was on this thing all night till open the next morning. And I'd do it over and over again, thinking that, like, this is hunger. This is hunger. I'm showing hunger by being up this late, paying attention to charts. In the mentality was that I'm doing more, so I'm gonna make more, and I'm gonna be better. When you learn over time, it's there's a there's a reverse correlation. There's like a negative correlation, my bad, to doing more in this industry. Realize the best traders are placing like 14 trades a year and making like 2, 3, 4, 5 million on the year annum P&L, bro. Whereas like someone sitting every day placing like 40 trades a day and making like $50 or break even sometimes. So the less is more. And just like sales, right? In sales, you'll learn, hey, I speak less, I get more out of it, right? Before I digress into that, let's look at gambling, right? So when you get into this space, gambling is definitely a byproduct and a mental model that's easy to slip into, because now you're thinking about the outcome. Now you're thinking about making money, and all you want to do is make money, right? So what does gambling produce? So say you take a win off a gamble trade. There's no rational analysis. There's really nothing there that's keeping you grounded, right? You took a win. You're like, man, this is easy. I really didn't do much. I just looked at it, I placed the trade, and it hit. Euphoric and false expectations. So realize that now, because you take a win, you're definitely going to experience some dopamine. If it's a big win, you're going to experience a lot of dopamine. And you get into a sense of delusion when you're experiencing dopamine. Realize anyone who's using substance abuse, they're seeing visuals or whatever, right? This is off topic, but realize that they're not really in a grounded reality like environment, like within their mind. So when you're euphoric, you can set false expectations. Euphoria is a delusion state of mind that blinds logic. Moreover, your expectations for future performance is only bolstered by chance data. So the trade was a gamble and you won. And now you're going to go into the next day or the next session, or whenever this trader in this scenario, right, decides to trade again, thinking that outcome I just got, it could happen again easily because of how easy this last trade was, right? And the data you're getting from those trades where you're gambling is not real data. Maybe you'll get data on your psychology on like, oh, why was I gambling after you just blow up? But you're thinking, oh, this thing works. This thing's gonna work over time. Look, I won today. I'm gonna do the same thing again every day. No, because in reality, it was a gamble. And in reality, that was just probability playing your favor with no analysis, no professionalism, just you clicking a button and getting lucky. Do you think anyone who becomes great at something, anyone who masters something, got there by luck? Or is anything that's gained by luck alone, right, maintained? No, it's not. Your trading mind is turned off, your behavior is altered, and your emotions take over your system, right? So you can't even trust the data you're getting from a win. And what does this lead to long term? Say you have a streak of lucky gambles. That first loss, due to the fact you have false expectations, just sets you up for pain. So when you take a loss after a gamble win, right, you doubt yourself and uncontrol. So for someone who's trying not to gamble and they knew they just traded compulsively and they took a loss off a gamble trade, now they're doubting themselves and there's no control because they're doubting themselves. You either push the slot machine till you're out or you stop and are left with believing you lost your abilities. In both cases, your trading mind is turned off, you lose trust in yourself and ability, and you set yourself up for a labyrinth of mental intrusions. So, anyone who's experienced gambling in the market kind of understand, especially someone who's been trading, say doing well, and then next thing you know, they're one day away from a payout, or they decided not to withdraw profits from a live account, and they're like, you know what, I'm going to take another trade and then withdraw, right? And they lose. Now you're dealing with the mental intrusions of, oh, why'd I do that? What if scenarios? And that's hard to come out of because over time and long term, gambling will destroy your confidence. So with A, which is the outcome of a win, euphoric and false expectations, you'll experience overtrading, forcing trades, hoping your trade works out. See, a pro trader does not hope. A pro trader executes off of signatures in the market due to the probability that they see will play in favor for themselves with consistent understanding and consistent execution and precision. There's no hope in their trade. They expect their TP to get smashed. They expect their stop to not get hit, and their stop is placed in an area where the idea is invalidated. Not oh, it's just gonna go up a little bit and then come down. I'm gonna move my stop. No, it's this is what I anticipate, and I'm gonna show up and anticipate this, and I'm gonna stick to my word and stick to this. If you're managing a trade while already placed the trade, it's like equivalent to what's a good understanding of that? Bro, it's equivalent to like wifing a woman and then just becoming like more hands on and insecure with her. when it's like the very reason why you wifed her was because of the security and the right emotions and the love you felt. But now, because you're committed, you're in the trade, now you're more hands on, now you're micromanaging, now the relationship is experiencing some deteriorations emotionally, mentally. Go back to hands off, bro. Go back to what it was. Place the trade and just continue doing what you were already doing. The process. So, doubt and uncontrol. You lose trust in yourself. In a high stress environment coupled with exposure to loss, trust in yourself is all you have to safeguard positive performance. Trust is very big. You need to be able to have confidence, and most of that confidence comes from trust. And where can you get trust? You get trust from consistency. If your foundation is on knowing that you're in a process, oh, I took that loss, but that loss is a part of my process. If your foundation is that, then you can trust you're going to step in the day with a clear head, and it's going to feel easy, right? So what happens then? Hesitation on good setups, taking profits too early, taking profits too late, dismantled system if there was any to begin with. So if there wasn't someone who already had a system and say it was working, the way a working system fails is by the person executing it. Realize, and this is before I finish this video, and that concludes the series for psychology, right? But before I let you guys go, realize the statistic is known. Over 90%, 95, over 95% of people who try intraday trading and trading in general fail. And all these people have different strategies. If you read the book Market Wizards, you see that all these people who are considered wizards in the market have different strategies. They have different personalities. They execute differently. There was no correlation to how they traded, but they were the winners, right? Everyone trades differently. But guess what? Majority of them fail. So regardless if the system works or not, because it works for some, doesn't work for others, that should let you know if you put that on a spread, there's no correlation anywhere. The only thing that could be held accountable for what's working and not working is the person executing. And that's what happens when you deal with probabilities. It comes down to the wire. But with that said, that's going to conclude day 2 of Financial Speculator series. If you want more of the psychology before I get into the 4 other main topics I want to go over, which may be split into parts as well, just let me know in the comments. But I hope you guys have a good Wednesday. Take care.